these latest tech earnings tell us about the industry. We're joined by Max Wolff. He's the chief economist at Manhattan Venture Partners. Max, always great to have you on the show.
Thanks. It's always great to be here.
Well, we see really that tech has been on a tear. Last week we had Google's parent company Alphabet, as well as Microsoft and Amazon really rallying on the back of strong earnings. Today, we saw that Apple and Alibaba shares are up. Is tech really leading the market right now?
Yes, we've seen tech lead some of the interest in the market. Lots of money has rotated to tech. These are tumultuous markets. When risk is on and the stock market's soaring, it's usually tech that leads us up. To some extent, tech leads us down too when people get the jitters or they get worried about where the future lies. We do think this market's going to be tough sailing for a while. That being said, tech is a bright spot. American tech has been a bright spot. And increasingly, some of the better names out of China are also attracting worthy attention on really excellent returns. Alibaba is certainly the leader of that pack.
All right, well, let's start with Apple. Of course, the main focus is always on the iPhone, which is their main engine driver of revenue. Sales of the device rose 99% in China. That was a little lower than in the previous quarter, but what do you make of that 99% jump?
So it's a huge jump. There's a little bit of dispute in some quarters of what maybe it's 70, but whatever it is, 70%, 99%, fabulous number. If there's a slowdown in China, no one told Apple, and no one told anyone who's interested in any of their products, which is good. And a little bit, we got that indication from Alibaba too. Yeah. So it's very clear that this is a huge status product, that we're starting to see Apple get more market penetration, that we have seen crackdowns on the counterfeits, and that the iPhone is the phone to have, and that in China, as well as around the world, there is some significant switching from Android phones to iOS phones, and nothing makes Apple happier than that.
Absolutely, and Apple devices are more expensive than their competitors. Does that actually help them in that it makes them more of a status symbol?
Yeah, well, often when an economy has a bit of a rough patch, whether that's the US or European economies or China, the most affluent do the best, and the most affluent buy iPhones. They are kind of the American Express of electronics at this point. They're kind of a badge of upper classedness, and lots of folks buy them who can't afford them too, by the way, because they're aspirational, and they're a really I-made-it product, so there's plenty of fakes out there and folks who maybe own them and maybe shouldn't, but nonetheless, those all still hit the bottom line as sales for Apple.
Now, CEO Tim Cook has said that they're really focusing on China for their growth forward. Do you think that is the right strategy? Is there still much more room for Apple to grow in China?
Yeah, so we know that even if China is slowing, it's still slowing to a huge growth number. We know that the Chinese authorities quite wisely are pivoting to a more consumption-heavy economy, and we know there's a lot of people who are middle class or more affluent than that in China. So absolutely, they're rotating to China. It's been a winner. It's kept the sales up, and China is honing in on being the most important market, surpassing the US in the not-too-distant future for Apple. So that's a big story, and this was a big quarter for Apple. Mostly good news, although a little bit of a weak spot that didn't get much attention is we continue to see quarter after quarter continued declines in sales on the iPad.
Okay, well, we did see that the shares were pretty much unchanged in the after hours. I mean, slightly up, but not by much. On the other hand, Twitter really tanked after their earnings came out. Is that really on the weak revenue guidance or something else at play here?
Well, I think Twitter's going to need a lot more than 140 characters to retell its story to Wall Street, right? So part of what happened here is, ironically, this is a messaging company that hasn't been very good at getting its message. I think that people were relieved to see Dorsey, one of the founders, come back. However, that was pretty short-lived because it became clear that he was doing something kind of crazy, which sort of suggests he isn't listening to very good folks around him in his own kitchen cabinet or intimate circle. Smart, capable guy for sure, not the CEO of two companies, one of which needs to turn around and one of which needs to reprove itself and go public, because no one is, because that's a job for 4 people, maybe 2 on a tough day, definitely not 1.
Okay, so you just think he's overstretched by also being the CEO of Square?
Yeah, like it's sort of one of those things where you're not quite sure, right? It's like, why didn't someone else who cares about you tell you this was a bad idea? And if they did, why didn't you listen, right? So a little bit crazy as an idea, smart, capable guy. I like Twitter. I think Twitter's probably already turned the corner. I think it has a real future. I think it was hard for people to figure out how it was going to monetize. And let's be honest, part of the reason the street didn't figure out how Twitter was going to make money is because it wasn't 100% clear that Twitter had figured out how Twitter was going to make money.
Right. Okay, well, let's move on to Alibaba. The shares did see a little bit of a bounce on the back of its earnings. Do you think it's really the revenue growth that was most impressive?
I think there's a bit of a relief here. We know that Alibaba is doing all kinds of interesting things. We know they're making big plays into India, which looks set to grow very rapidly. We know that they're still a dominant story in China. I mean, they really control e-commerce. Again, a little bit like Apple, the Chinese economy may be slowing, but it's slowing to a huge growth number that would be the envy of most of the world. And there's a push to consumption, and it seems to work. So
do you think that's particularly among the e-commerce sites that are doing well in this slower growth economy?
Absolutely, but the e-commerce in most developing countries, China included, like iPhones, is a little bit aspirational, and it is a little bit the province of more affluent people.
Okay, great. Lastly, where do you see, we've got, of course, the big holiday coming on November 11th, Singles Day. What's your sort of outlook for Alibaba for that day?
We expect another major record to be broken again on Singles Day. It's sort of the Black Friday, what we have in the U.S. here. It's the biggest single day. We're going to see a lot of promotions. And the other thing we really want to see is a high take rate, good margins.
All right, Max, thank you so much. Always great to get your input. That was Max Wolff, Chief Economist at Manhattan Venture Partners.